Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday the 19th of May. Starting off with the FTSE 100 as usual. It's been remarkably static over the recent past. We've had a dance either side of the 50-day moving average there. That's the blue line around 77.10 now. That's still falling, which is also quite an achievement. But we've got the RSI just above the neutral 50 level, and we're above the 50-day moving average, so we can say we're half full rather than half empty. Initial target here on an end-of-day close through 7800, which has been recent resistance up to around the 7890 level. That's a key level because that's the February resistance line. Above that, we would break the neckline of a notional inverted head and shoulders there, which is 600 points deep, and the break of that neckline would then imply a 600-point upside, according to charting rules. The only thing is, I suppose you'd be just looking for initially the top of that rising trend channel from September, as high as 8300, or if you're very conservative, just a retest of February resistance just above the 8000 level. But very interesting to see whether we can hold this right shoulder area around 7700. Below that, the risk of 7630 in April support, and the worst case scenario at the moment would be back down to the 7480 level, where the 200-day moving average is and the floor of that rising channel from September. Onto the DAX, which is rather more lively than the FTSE, and here you'll see why. We had our end-of-day close above 16,000. The trigger yesterday, in fact, we gapped up through there, so that broke that little range we had. I think the FTSE will do the same kind of thing at some point, hopefully quite soon. Rising trend channel here, heading for 16,700. That is the target for the end of by the end of next month. Obviously, the way things are going, might actually get there by the end of this month. Only back below 15,900, really risking a move down to the floor of the channel there, around 15,600. On to the Dow, which has not been quite such a smooth ride as the DAX. I don't think anything could be, actually. But here, at least we've managed to test the 50-day moving average for the third time in the recent past. A bear trap from just below it. It's rising, so is the 200-day line. So really, we should be on our way to break an April resistance line, April 2022 resistance line there at 34,000. Above that, looking to the top of a rising trend channel from September as high as 37,000 over the following 1 to 2 months. But the downside here at the moment looks as though it will be limited to 32,700 and the 200-day moving average area and that late 2022 support line. The good thing is that the RSI is now pushed it back above the neutral 50 level, so we really are poised, hopefully, for a move to the upside. Going on to Bitcoin, and here, still trying to grapple with the pullback that we've had since the middle of last month. Support notionally at 26,700, which was late March support. Below that, there's the risk of 25,000, so we're above at least the first level there. If you're looking for a trigger on the upside, it would either be a break of that April resistance line around 27,900 or an end-of-day close above the 50-day moving average at 28,400. But the RSI well below neutral 50 at 40, so there is still some time to wait for people if they're looking for that break to the upside. Moving along to the stocks, and first one is Abingdon Health, which has been doing rather well over the recent past. A lot of these COVID plays are starting to turn around at the turn of the year. We broke that line there from January around the 5.5 pence level, and we've made good progress really since the end of March. Looking for 12 pence at the top of that rising trend channel from last July, while we're above the 50-day line around 7 pence. Nice RSI bounces above neutral 50, which tends to be a decent continuation signal. On to Cleantech Lithium, where it was a rather painful decline from the February peak near 90p. Seems rather overdone, but what's happened since then is it came back to the main support area. There was an old low there from August last year, around 33 pence. The low recently around 35 pence or so, mid-price, and bounced off that, so notionally a higher low. Still looking for that resistance line there from February to be broken around 41 pence on an end-of-day close basis to give us an initial target in the low 50s with the 50-day moving average. Moving on to a stock which has revived itself after funding news, Chaarat Gold. Here you can see there was a broadening triangle. Obviously there wasn't much price action between October and April, but the things still fit. We've just bounced off the middle of the gap there and the 50-day moving average around 10.25 pence. Above that, we're looking for a retest of 16 pence and the June resistance line projection, hopefully over the next 2 to 4 weeks. But it would be good to see no fall below that 50-day line for Chaarat. On to Eurasia, which is, well, we're hoping it's bumping along the bottom. That would be maybe a charitable thing to say at the moment. Went to oversold territory, or deeply oversold territory, at the beginning of the month, and the low there around the 2 pence level. Looks like we've recovered and gone back into that falling wedge that we had there before, so the support notionally there around 2.4 pence. Above that, hoping for another test of the 50-day moving average, currently around 3.4 pence. But as you can see from the chart, the 50-day line has been the place where the shares have retreated from, so we really need to break that pattern. On to a stock which I've been covering of late quite frequently for some reason, and the news matching the enthusiasm there. Here we had a trendline break from back in April. That was basically around the 20 pence level. Above that, looking for the 50-day line at 27, and then hopefully maybe up towards resistance on the way down back in April around 34 pence by the end of next month. But the key here is holding 20 pence. And if that can happen and we stay above neutral 50 on the RSI, then there should be further progress / recovery for Genedrive. On to Hellenic, which has been a sort of joyful recovery over the last month or so. Nice hammer candle there midweek, and we're just touching the 200-day moving average now. We're looking for around 0.24, so hopefully we'll get that as soon as the end of this month. If you're a fan of the shares and looking for greater glories, then the next level up is probably up towards the 0.3 pence level, which I think is where the shares came in. So I think that's where the IPO was. But correct me if I'm wrong. On the support side, above 0.16 is really what we would like to see, and above that, looking for 0.3 by way of 0.24. On to a stock where there's been a lot of interesting chit-chat on Twitter, etc., and so far the recovery people have been correct, especially with the way that we've had an island reversal either side of the 50-day moving average. You've got the 50-day line now rising. We had a gap higher. We didn't fill the gap, so it was a failed gap fill, which is a positive. And above the initial May peak there, around 6.75 on an end-of-day close basis, we're looking for not only that resistance line there from December around 8 pence, but at best case scenario target by the end of next month as high as 10 pence. But it would be nice to see the shares complete a U-shaped reversal and go up the way, well, almost as aggressively as they came down. Moving along to a stock which I haven't covered for a little bit. That's Landore, and here you can see that looks like we're in this falling wedge situation. We've bounced off oversold territory. Very strong candles over the last 3 sessions, opening at the high, closing at the low. 3 days in a row. That's pretty impressive. End of day close or weekly close above the 50-day line at 13 pence, and we're looking for hopefully a retest of March resistance at 16 pence as soon as the end of next month. Ideally, we stay above that old October floor there around 11.75 pence ahead of a potential move to 16 pence over the near term. Always interesting to see where the stocks which rise on news actually maintain those gains. So far, Mast is doing its best, so it's near the highs of. We've already explored the highs of yesterday's. Looking for a break of yesterday's peak around 2.05 pence to get us up to 2.5 pence, perhaps as soon as the end of next month. The reason we are on bull alert here is that there's been a bear trap gap reversal, and looks like the shares have been listening to me. It's gone up while I'm talking, but bear trap gap reversal, and as I said, above the 2 pence area, looking for 2.5 pence as soon as the end of next month with that unfilled gap to the upside. On to a stock which I give occasional oxygen to. Here we've got mineral and financial investment, and here we've got very sort of slow but quite an aggressive turnaround here. Initial target here was the old 5-year resistance line projection around 29 pence. We can maybe improve on that by the end of next month and have a target as high as 33 pence if we can clear the recent resistance 25 pence or so over the next day or the next session or two. Another stock which doesn't appear too often is Star, if I can get the right shares up here. Star Phoenix Group. Here you can see that we've had a sort of a rather wriggly progression over the recent past, either side of the 50-day line, but if we get a weekly close above the 200-day moving average at 1.1 pence, we could be looking to as high as 3 pence over the next 2 to 3 months, which is the top of a broadening triangle from this time last year. Southern Energy looks like it's also getting its act together at the lows. Here you can see that we've broken out of a falling wedge. We've got bullish divergence, a low for May, but higher RSI trace. So while we're above the trendline break level, around 17 pence, we're looking for as high as 23 pence over the next few weeks. Just a couple to go now. First is Tirupati, which still trying to recover and doing it quite well via the now rising 50-day moving average. That is encouraging. That suggests that we should break recent resistance around 38 pence. Above that, looking for as high as 55 pence over the following month to 6 weeks. But the key here is holding above or above the 50-day line at 31 pence. Finishing off with a requested stock where people are presumably hoping for a turnaround. Here you can see that we did have a falling wedge breakout, but that failed. We were in the oversold RSI area, but trying to recover. But at the moment, looks like it's still a bit early to call the bottom on the shares. If you're looking for any level to break, it's probably just that recent resistance there at the 1.3 pence level. We need an end of day close above that to signal that the shares are ready to turn around. That's it from me today. More updates over the weekend.